Hey guys, what's up? Hitori here. Welcome to episode 41 of the weekly market outlook with Trex Prop. Now, in this episode, we'll be diving straight into the latest fundamental analysis and also forecasts spanned across multiple asset classes such as indices, equities, commodities, and of course forex, right? So let's cut straight through the noise and focus on the data. We will uncover trading opportunities alongside the technical charts. If you have any other asset classes you would like me to cover that I may have missed out, of course you can leave a comment down below, or even better, you can join our free Discord channel. Link is in the description below. Last week, let's just kind of do like a recap of what we saw in the previous week. So Friday last week was a bit lackluster, right? Let me just pull through to the previous week. We saw that the euro and the pound was on holiday for Good Friday, and we also have that for next Monday as well. The coming Monday, of course, most markets will pretty much be on pause. Many exchanges, of course, are closed, like the CME group. They're pretty much on holiday. So with that in mind, let's go straight through the data. So last week for the US, we actually saw unemployment claims came out, which is positive, right? We saw it came in at 215,000 compared to the forecasted 225,000, which is very, very nice. This is better than expected, especially since with all the tariff fears and all of those things, that could take effect next data release. But as of now, at least, the unemployment claims are not too bad. Okay, this is a positive sign for the US dollar and may provide some investor relief. Okay, and also CPI for the US is it is kind of slowing a bit. It is cooling with 2.4%, which is lower than the expected 2.5%, meaning it is currently being steadied, right? Unemployment rate is also at a solid 4.2%, and these numbers, they scream stability at a time where stability is very rare with Trump in office, right? Now this is hinting at a soft landing for the US economy, but like I said, it is at this point in time, I feel like data is secondary to what the news releases might say. Things like tariffs, political noise, they might be the running factor in short-term movement in the markets, not long-term. Long-term, of course, the data still prevails, but short-term wise, all those crazy movements, even intra-week, right? It could cloud your trading, and it could be the sole mover of the markets, right? But as long as we stay objective, we understand that whatever tariffs that the markets may see, as long as we stick to the data, long term we will be on the right side of the markets. So coming into next week though, this is the week of 21st of April until April 25th. Monday, like I said, bank holidays all around, but starting from Wednesday, we are going to have high impact news releases throughout Wednesday, Thursday, and Friday. We have PMI coming out for the US dollar, as well as GBP, as well as the euro. We'll have a bunch of these news releases coming on Wednesday. So throughout London session and maybe even New York, it could be a bit iffy to trade if you are trading intraday price action. Thursday, we will have the unemployment claims for the next round coming in for the US dollar. And for Friday, we will have retail sales coming in for the UK markets. So with that in mind, you can definitely expect that Monday and Tuesday are going to be very slow markets if they're even open for Monday, and then we might see some momentum kick in on Wednesday onwards. Okay, so with that in mind, let's get straight into the charts. First off, we have the indexes. Okay, so here we have the S&P 500 index on the ONDA data feed, and right here it is holding strong. If I just kind of remove the indicators real quick, we saw prices kind of stagnate last week after that big dump off of tariff fears. We did see this reaction get bought back really quickly, and then we are starting to range. Okay, looking at the fundamentals, of course, we do see, or we could see, upside potential if price action continues to thread higher. Of course, I don't dare to say that we have bottomed up here. Of course, bulls, they would like to see us break through this price action, continue higher, right, clearing some of these highs. But until we see a break of some significant area of support, we can't really say that we are going to be heading higher, because right now we are just stuck in a clear range. Okay, so pulling out the indicators right here, we have the AutoUFOs as well as the AutoClimate by Predictive, one of our educational partners here at TradeXprop. So this is their patented technology, and essentially all these red and green boxes right here that you see are essentially areas of support and resistance in the format of unfilled orders. The algorithm that they've created tries to predict, or at least try to draw out areas of potential areas that you could keep an eye on. And currently we are holding this level of support right here. And if you recall last week, I said that I cannot say for sure that we're going to see price just push higher from here and turn bullish, because we're pretty much wedged between these two areas. If you were to buy down here, you only have like 4% of movement up into this area of resistance, which also coincides with the 200 period moving average. Okay, of course, I'm not expecting an immediate crash. I do expect price to kind of cool a bit, waiting for more updates on tariffs. But as of right now, I can't say for sure we're going to be looking at a bull market, right? A break above this level and holding above it might be good for bulls, but then it comes straight into the moving average as well as these two areas of resistance. So right now, yes, you could potentially take longs from short-term optimism from this level and come into this area of resistance. We could retest this area and then see a slight dip lower. Okay, I cannot for certain say I'm expecting us to bottom here. I do still anticipate some kind of a pullback to kind of clear out some of the gains we've made last year. Okay, but just keep in mind that we have dipped like almost 20% from this leg right here, from this move lower, pullback. This move here, we dipped 20%, and from the peak we have dipped 21%. Okay, so if we expect a leg, we do expect a leg lower, it means we're going to be expecting more horrendous and pessimistic news come out for the US economy, or even at this point the global economy as a whole. So if you want to expect a move lower, it would mean something is going to be escalating this bearish move. Okay, and I don't see that happening just yet, but just keep in mind that that could be something that could happen if trade wars continue to escalate. Okay, so that is it for the S&P. If you take a look at the Dow Jones right here, let's go on the capital.com pie chart, showing the exact same thing, right? Big push lower, support could come into this area of resistance and then retest. The same thing goes for the NASDAQ right here. The NASDAQ is a bit more rangy compared to the Dow and also the S&P, where we are just caught between these two areas straight off. The algorithm has printed that we are forming this resistance while we are also within the support. So the NASDAQ, in terms of price action, is pretty much the weakest out of the three. Okay, so that's something you will want to keep in mind when you're looking at the markets from this lens, at least. Okay, so that is it for the US indices. Let's take a look at the UK 100, or for those of you that may know it as the UK, the FTSE 100 index. So just pulling off the indicators right here, we also saw that large dip. Every market pretty much dipped off of tariffs, right? We've been ranging this price action, and then we just saw this large move lower, and then we saw that being bought back as well. So the UK is catching some attention, right? Especially the UK 100 index is catching attention because CPI is actually set to rise in Q2 for the UK, right? And when CPI rises, this limits the Bank of England rate cuts, right? We are likely to see rate hikes, which may not be the best for indexes and stocks and risk on assets, right? We are seeing, of course, recent CPI is at 2.6%, it's down from 2.8%, which, may be a cause for a short-term long trade to previous highs, okay? Where we might see later on, later in the year, maybe in late Q2 or even Q3, we could consider the idea from a long idea to these highs, flipping down into a short towards the prior lows, or maybe some of the lows that we have formed right here, if they do happen. Okay, so pulling off the indicators, right? Tons and tons of support is being formed by the AutoUFOs right here. So definitely we are currently retesting the 200 EMA after we saw this large drop. Let's see if we could break above it, or if we do retest it to break beneath, find some support here, and then do a retest again. For high probability longs, in my opinion, we would need to see a retest of this area, break above it, and then maybe from a UFO right here, just around it, and then use that to come up into prior highs, or maybe if you want to play it safe, to retest this current active red UFO around the 8.7 to 8.5k mark. Okay, so it all depends on how we react to this EMA, because quite frankly, all of this price action was pretty much sliced through and brought back. So I don't really see any information right here that could help us when we draw these areas of support. Okay, so the climate right here is still pretty rangy. It's not showing any good momentum. We did see a bunch of red UFOs, red climate, and then it was overextended to a certain point, but now it has recovered to become bullish, and it is currently it has been reset. Okay, so how we trade at this area, definitely something to take a look at. If we reject lower, we could continue within this range, but if we break above it, could see higher prices. Okay, so that is pretty much it for the equities, right? We covered the S&P 500, the NASDAQ, the Dow Jones, and also the FTSE or the UK 100. Let's take a look at gold, right? So here, let me pull up the ON data feed on gold. Oh, I removed everything, remove my drawings. So gold has pretty much just been bullish. There's not much changes to that story, but it is tearing through in this risk off environment, right? I mean, taking a look at what Goldman Sachs is saying, they just released a report saying that they might be eyeing a 3.7k USD mark per ounce by the end of this year, which is just insane for gold prices. If you don't know, the Chinese community, they love gold, right? They buy it for every special occasion, like marriages, or some even as just normal gifts. And with this potential forecast by Goldman Sachs of 3.7k, and even with a tail scenario of 4.5k US dollars per ounce, if the Fed does decide to shift its policy, or if the dollar confidence just kind of weakens, this is going to be a crazy time for people to get involved in buying physical gold in any market. Okay, God bless my gold ETFs. I've been DCAing into gold ETFs every month, and that's been paying off well. But for people that trade gold, this is a slight worrying thing, because it's just been going up without any pullbacks for people to get involved, right? Like I know a bunch of people that have been trying to, they're drawing fibs, right? They're drawing fib extensions, fib retracement tools, and then they're just trying to eye areas for gold to get in, and sometimes it does give a pullback, like from this swing low to swing high. Yes, we saw price pull back into at least the 50% of the range. I don't think it quite met the 618 retracement right here, but you know, areas like this where price just goes and goes and it doesn't even pull back, it doesn't give you any sort of information or any sort of an area of entry for pullback trades, right? So you could end up missing all of this upside potential just because it didn't pull back. But at the same time, you know, you're buying so high up. We are literally trading at all-time highs. It has broken the 3.3k mark. When is it time to actually get in? So definitely I do think that it is a scary scenario. Like this pullback right here was pretty much off of a bunch of people liquidating their gold positions and then putting it into settling their margin calls in other asset classes that were losing after the Trump tariff on the 3rd of April, which is when Trump announced the tariffs. You know, but essentially, I think if you are someone that's a bit more cautious, there's nothing wrong with trying to wait for a pullback into somewhat of a discounted pricing or a fib extension to or fib retracement to. There's inherently nothing wrong with you trying to get involved through that. You just have to be okay with missing out on, you know, gold tears that it's been going, you know, for quite some time now, just gold tearing higher and higher and higher. Okay, so pulling up the indicators right here, you can see just how far ahead we are compared to the 200-day moving average. Is all the way down here around the 2.7k mark, and I'm not expecting the price to just dip 20% from where it currently is to retest that. No, this is the first potential entry if you would consider using the AutoUFOs. Of course, this is not any financial advice, it's just purely for education purposes only. So we could consider a pullback here to get in your first small position and then see if it rips higher. If you enter right here and it dips, no problem, you can enter around this structure point right here around the 3.1k mark, or wait for the UFO down below here at the 3k to 2.9k mark. This price leg can offer you some nice DCA entries. There's way too many green UFOs down below. You could wait for the ones on the weekly if you would prefer that, right? You could pull back lower here and then you could enter right here if you would want to have a longer term holding. But the daily is just fine. There's nothing completely wrong with trying to enter DCA into these positions for, you know, swing traders, right? Day trading may be a bit difficult. Intraday movement could be crazy these days, but completely still doable. Okay, so that is it for gold. Let's take a look at crude oil, right? So this is crude oil right here on the Black Bull price feed, and here this is something that is a bit sketchy, right? We dip all the way down into $54 per barrel, right? And we did see some retracement or some pullback, seeing it being bought back. If I pull back the indicators, we are also quite a ways away from the moving average. Now, I don't personally think that we are going to continue higher into the $70 to $71 mark as well as the moving average. I think we could continue to see lower prices by drawing a fib, right? We have reached the 50% mark, so we could see reactions from some of these price action, which is closer to where we currently are right here around the $65 mark, and we could see a rejection lower from there. Personally, I don't think we're going to exactly be seeing a complete correction of this bearish move, okay? But I am going to be looking, or at least I would agree with the idea that you could see potential shorts down to take this low after this large momentum move lower. Okay, so still bearish on WTI or US oil, so definitely a good pair to put into your watch list if we do see some bearish rejections from here. Right, so taking a look at the forex pairs, pulling off the indicators, we are also still chopping after this big bearish move. We are currently trading around the $99 price point as of now, and I think even though US data, it came in pretty strong, it is likely due to it being subdued by just the overall sentiment across the markets, right? We are still in a very defensive segment. People are still buying into more defensive stocks like XLE, or even emerging markets, right? We're seeing cash flow into those sectors. So with that in mind, I do think that everything else against the dollar is still going to pretty much be bullish. I mean, take a look at pound dollar right here. It's just been ripping higher for the past 10 days, right? No pullbacks, not even a single indecision day. It was completely just bullish momentum, and I got burned trying to catch some shorts because the model that I use, one of the models that I use is more of a mean reversion intraday strategy, and I've been burned trying to catch this short right here, just expecting some form of a pullback before we continue higher, but no, it just kept ripping and ripping and ripping without any form of a pullback. So currently definitely you could see this momentum continue, right? You could see the pound the cable continue down and then push higher, right, off of just how weak the dollar index is. We are currently not moving anywhere, but definitely we could see price continue up into 103, pull back down into lower price points right here. Depends where the EMA is. I'm not really looking at the EMA to hold anything. I don't think we might retest it. We could just come up into the 103 mark, provide some relief, and then price could continue to dip lower if that is what we are going to be seeing with the weakness of the DXY to continue. Okay, you take a look at Euro USD as well. It looks to be bullish, but it could also just retrace slightly down into something within here. Maybe this some of the people call imbalance, but I tend to be a bit more objective. We could pull back into this area on the daily and then retest some of these UFOs and then continue higher off of the ECB's 25 basis point rate cut, which is currently pressuring the euro, which is why you see compared to the pound, the euro is the relatively weaker pair, since we have seen some bearish days and the gains are subdued when the DXY is so bearish. Okay, take a look at UJ as well. Same thing, right? Just crashing down, same as the DXY, because it is paired against the yen, which is getting higher and higher and higher because of its nature as a safe haven asset. Okay, Japan's constant rate hikes, they keep the yen as a solid hedge against market uncertainty, against crazy market movements. Okay, so anything that's paired against the dollar should be seen to be strong. Okay, anything that is USD denominated, likely to gain strength. It's that simple. Okay, so yeah, I think that's pretty much it. We covered quite a lot of things. I would like to cover Bitcoin, but it's just been chopping forever. My areas of interest hasn't even been reached yet. I wanted to reach into this area of accumulation around the 74k mark, tapping into this weekly UFO as well as daily UFO before continuing to see any sign of push move higher, which I don't think is possible in the short term, seeing as how risk off the asset is, and Bitcoin in general is a very risk on asset. It's just been chopping around the moving average here, which is to be expected. In fact, I expected worse from it. I expected a larger drop, but as you can see, it didn't happen. Okay, it's just being subdued right here. So definitely, if we do retest some of the lower levels right here, it could get people interested in the pair again to push price higher. Okay, so definitely some entry points around this area, they are definitely possible. I know the climate shows that it's bullish, but really it is just ranging. Okay, it's just ranging right here, not showing any signs of commitment, just playing it safe, not getting involved in this pair at all until I see what I want. Okay, so yeah, that's pretty much all there is to this week's outlook. We covered quite a lot of pairs. So yeah, definitely do look for next week's videos, and I will see you all in the next one. Peace out.